Hello, everyone. Hope you had a nice week. Getting ready for the weekend. All right, so I just want to point out something in the market that's going on here. That is what we would call a flight to safety. Now, it's not your traditional flight to safety. Your traditional flight to safety means, all right, people think things are going to get bad, so they're going to sell assets that aren't going to do well and they're going to buy safe things like the traditional, all right, sell stocks and buy gold, right? Which is kind of ridiculous because, frankly, if the world was coming to an end, your gold wouldn't really be worth much. You know, your canned water, or your bottled water, and your canned food, and your vitamins, and your guns would be worth money, but your gold wouldn't. But anyway, so we're just going to talk about this in the context of the stock market. So let's just take a look at the S&P. Here's the S&P 500. Looks pretty strong, right? Could be making a breakout. We had support here, became a level that was resistance here. This is our buyer's remorse. People bought here and then the price goes lower. And a lot of the people who bought are like, if I can sell this and get out of break even, I'm going to. So when the price gets back to their level, you get these remorseful buyers placing sell orders. And if there's enough, the level that was support becomes resistance. Became resistance again. Now we're above it. We could call this a breakout. This could tell us that the traders and investors who created the resistance with their sell orders are out of their way. They've either canceled their orders, finished. Regardless, anytime you take supply or sellers out of a market, it's a stage. So it's a stage for it to go higher because the buyers are going to have to be aggressive and be willing to pay higher prices if they want to bring sellers in off of the sidelines. Now, the S&P is made up of 11 sectors, and different ones are in the driver's seat at different times. So we're going to look at the important sectors. First is technology. Now look at that. That is really overbought. That is literally, and this is why you shouldn't listen to the media. Has anyone in the media told you, gee, the technology sector is about, up 2 points away from making an all-time high? So this is our technology sector here. We're looking at the ETF that tracks it, XLK. All right, looks great, doesn't it? All right, now let's go look at the healthcare sector, second biggest sector. That doesn't look so great, does it? Trending lower, off its lows today, but huge sell-off yesterday. What's the third biggest sector? Oh, financials. They're not doing so great. Just kind of going sideways. Next biggest sector, consumer discretionary. That's not doing so great either. It's at resistance. So it looks like the only really strength that we're getting is in the tech sector. Now let's go look within the tech sector. First, we're going to look at XLK. Now, a lot of what you think is big tech is not big tech. For example, Facebook, Google, they're in the communication services sector. Amazon is in the consumer discretionary sector. So look at those. Anyway, here's our tech sector going nuts. Huge move. Looks like a breakout. Let's look at Apple because that's definitely in the tech sector. Gapping up, overbought, closing in on some resistance here too, which is going to be kind of important, but we'll talk about that tomorrow. Microsoft, look at that, gapping up, really overbought. All right, now let's look at Amazon, which technically is not a big tech stock. It's in consumer discretionary. It had a really good day. Facebook, really strong, on the verge of a breakout here. All right, so what am I telling you? What am I saying? Well, this is what I'm saying. This flight to safety means that most of the stock market is either going sideways or down. Most. But because some of the big companies are moving higher, it kind of masks some of the underlying weakness. I'm going to bring you up here to the S&P 500 fact sheet and show you the holdings. This models the S&P 500. 500 stocks in the S&P 500. Microsoft and Apple together are 15%. Microsoft, Apple, Amazon, and Nvidia together, 20%. So you have 500 stocks, and just 4 of them make up 20%. All right. So in theory, money could be coming out of 450 of those stocks and they could be going down, and maybe 40 are flat, and there's 10 more that are going up. And because of the way the weightings are set up, the broad market, this benchmark could be going up, even though most of the market is falling apart. And that's what we're kind of seeing now. All right, now I want to bring you back to, actually, let me just show you that now. All right, so we looked at, Facebook's ripping, but financials are going sideways. Healthcare is not looking that good. This is an ETF, the triple Qs. Sure, you've heard of them. This is the NASDAQ 100. It tracks the NASDAQ 100. The 100 biggest stocks in the NASDAQ that are not financial stocks. Together, Apple, Microsoft make up 21%. Amazon, Nvidia, okay, these 4 stocks together make up 30%. There's 100 stocks in this benchmark or this index. 4 of them make up 30% of it. All right. So this could distort this could distort underlying weakness. Now, here is the Qs right now. 1, 2, 3, Q. Really ripping higher. Now, let's look at an benchmark that has the Qs where everyone has the same weighting. In other words, a couple of stocks don't dominate this. Every stock in this is 1%, whether it's Apple or whatever the 100th stock is. Now, look at this. Whoops. Symbol's QQQE for equal weighted. Doesn't look as good, does it, right? Qs ripping higher. Equal weighted Qs, you can even say, are trending lower. Qs trending higher. Equal weighted Qs lower. So what does this show us? This shows us that most of the stocks in the Qs are actually going down. It's just the big boys, the behemoths, or what the hell do they call them? The magical or mystical 7 or whatever. Anyway, let me just show you how impactful or how important this type of an observation could be. Let's go back to the end of 2021, where the bull market that had been going on for 10 years was coming to an end. All right, so this is the Qs. This is 2021. This is late December. Look at now, this is the one where Apple, Microsoft own this thing. They're 20% of it. So theoretically, 80 stocks in this could be going down, 10 could be going sideways, and 10 could be going higher. But because those 10 have such bigger weightings, they can carry the thing higher. It's a weighted average. Now, let's just look at the Qs where every stock is equally weighted from the same period. Look at this. Sorry, let me start that again because I picked on the wrong one. I got to get the dramatic effect again. All right, so look at this. The Qs peaked at the very end of December. The Qs that are equal weighted peaked in the end of November, fully a month before. So this, again, every 100 stocks in this ETF has the same weight. This benchmark started to fall apart in November. But the headline benchmark, because so much of it is Apple, Microsoft. So what was going on was most of the benchmark, I don't know, can do the math, 50, 60, 30, 50, 60, 70% money's coming out of, but it's going into those big boys. It's the flight to safety. It's people saying, I don't know what to do. I'm worried. What's safe? Oh, Apple's safe. Microsoft is safe. These companies have been going up for years. People aren't saying, I got to sell my stocks and go buy gold. People are saying, I'm going to sell my stocks and I'm going to go buy these stocks that are safe. And the important dynamic and the whole reason why I'm talking about this is the type of action that happens when we're getting to the end of a rally, when we are getting to the top of a market. Now, we haven't seen it to the same degree yet that we saw it in the end of 2021, but the end of 2021 was the end of a 10-year bull market. COVID was a terrible thing, but in terms of the stock market, it was really just a blip on the radar screen. So, yeah, so this is showing some market deterioration, the flight to safety. Most stocks, money's coming out of. It's going into a few of the big behemoths there. That's pushing the benchmarks up. And that's it, everyone. Thank you so much, and I will see you soon. Hope this helps.